All right, good morning, everyone. Welcome back. All right, so in this morning's training session, um, we had a whole host of subjects or I had a whole host of subjects which probably needed covering at some point or another. Originally, we had planned to do charting like a boss, and I think today's training session is going to be a little bit of an extension of that. What I thought I would do, and this is really following on from some of the discussion that we had last Friday about, and as well, I think some of the previous Q&As, and I've had a lot of discussions with you privately. It seems to be quite a prominent subject or pertinent subject to be discussed, is about performing an initial analysis when you hit the charts, right? So sometimes we've had questions asked about what's the morning routine or what's the immediate routine when you're looking at a chart. And ordinarily we're talking about the wider time frames. We're talking about building a picture starting on the H1 and sometimes the H4. But what I wanted to look at this morning was the M5 time frame and the immediate thoughts that you can extract by looking at a chart on a smaller time frame. So, when you're hitting the charts in the morning, and I've always said that the most important price that exists on the chart is the current price, right? There's no price which is more important than the current price. You really have to put yourself in a market situation. And so if you imagine if you went to a market in order to sell mangoes, and uh, and you stacked up all your boxes of mangoes, you wanted to sell them, how do you price those mangoes? What you do? Are you interested in the historical price? Are you interested in what the price of mangoes was yesterday or last week or last month or last year? That tends to fade into insignificance, and the most important price tends to be the price right now. And you just need to have a very basic idea, regardless of the kind of obstacles that would be in the way. That is the price moving up right now, or is the price moving down right now? And you would use that principle in order to establish bias, and that kind of sets you up for the day, or it sets you up immediately for it sets you up immediately uh, uh, in terms of looking for a particular trade direction, right? So when we perform this kind of exercise, don't like to cheat with pre-rehearsed charts. So it really is your call. You just need to type in a chart that you want to look at, and and we'll get started. So I'll give you a few seconds to. All right, that was quick. All right. All right. Let's start off with the cable then, right? And we'll look at a fair few number of charts, right? So if anyone has any other suggestions, I'm waiting for someone to say a particular chart which I'm really interested in looking at. I won't tell you which one, right? But all right, that's it. I think that's the one, right? Okay, right. So let's get started. We'll take a look at cable, and we'll take a look at USD/JPY, and then we will look at the Aussie. All right. So this is the cable. I'm just going to get rid of. I'm just going to get rid of all the lines. We don't really need them. All right. And you open up your chart. You're looking at GBP USD. All right, what is the immediate thing that you notice, right? And how is it that you're going to establish bias? How is it that you're going to establish bias for that given day? There is only one thing which is actually missing from this chart, which is the daily opening range. So here we go. All right. Yeah, so we open up the chart and we find the price wherever it is. The only thing that I'm interested in when I'm looking at the chart, okay, Jay's raising a hand. I just want to check what's going on. Ah, okay. I know what's going on. I know what's going on. I forgot to do the share screen, right? Yeah, figured that out quick. Okay. All right. So we're looking at a chart of GBP USD, and um, as I mentioned in the very kind of brief introduction, the only price that matters is the current price, and and we need to know, is the price going up or is the price going down, right? So how you determine that is very simple, right? What you're looking to do is to see, has resistance been established or has support been established, right? And it really is as simple as that. That is the first thing that you need to know every morning when you're looking at a tradable time frame like the M5. Has support been established or has resistance been established? So if we're looking here at this chart of GBP USD, the price broke higher, and what we're seeing here is a support structure. Right, so support has been established, and that's been established somewhere between 54.50 and 54.30. Right, so the immediate thoughts, all right, and this isn't something which is going to translate into a trade straight away, right, but we use this to translate into bias, is that a support has been established. Therefore, as long as price is hanging above that support, then we can assume, or we would consider it quite safe to assume, a technical long bias. And if the price ends up breaking below that support, we're going to assume a technical short bias. All right. This is something which I'm doing every morning, right? And this is how I kind of narrow in ideas for trades. After that, I'm looking for the obstacles. I'm looking, right? Is there a hook we're hitting? Is there a resistance area we're hitting? Is there a trend line that we're coming up to, or something like that, right? But if we apply the morning routine upon cable, right, it just becomes really, really easy. You can see it, right? All the way up here, support's been established. And so the only thing which is going to have us looking the other way is if support gets taken out, and then we would look at support turning resistance, right? And it is as simple as that, right? It is not anything more difficult than that. So M5 time frame, right? And it's just GBP USD, bit of a godsend chart there, right? It made that interpretation very, very easy. One of the other things which I want to mention, and it is something which I've mentioned before, is that when you've got this empty space here on the left hand side, right, you got that empty space here on the left hand side, that is the best kind of chart to be looking at, right? Because what's very apparent is that over the course of the last 12 to 24 hours, there's been a one direction move on cable, right? And so then isolating that support area becomes very simple as well. Very, very straightforward process. Okay. What adds to that analysis then is I'm just looking at the opening range. All right, so we have the opening range here in the lower 54 area, and the price is above that opening range. So I know I've got an update today. If the price is breaking through if the price is breaking through support, she's breaking down through the opening range, it's signaling there's a down day, and then you're just looking for resistance to be established. Once you're seeing resistance being established, you can say, you know what, on the back of the fact that there's a resistance being established, my bias now is to look towards the south, right? Now, on the back of that bias, you're not going to be looking necessarily for a swing trade. Remember, swing trades tend to come off of lines rather than off of a support or resistance which has been established on a 5-minute time frame. But we're just looking for any kind of indication of current market sentiment, right? That is what we're trying to establish. And that is what this process allows us to do. All right, USD JPY, Euro JPY, and then the Aussie. So so here we go, USD JPY M5 time frame, and again, I'm just looking at the most recent move, right? And has support been established? Support seems to have been established in the opening range of the day, right? So here's our price movement. She moved higher, she pulled back, found support, broke higher. All right, as long as she's remaining above the 79 area, she's a technical long. If she breaks down below, that is what would alter the bias, and then we'd look for resistance to be established. And once resistance is established, that kind of gives you a confirmation that you can start looking to be entering trades in direction heading south. Right? Does it get any easier? Okay, Euro JPY. Euro JPY not too dissimilar, from the structure that we're seeing on USD JPY. So here's one particular structure. There's another structure which is here, right? And I always find these areas interesting where you have a consolidation. We have little consolidation inside of the hook. What it tends to look like is something like okay. Just overextended that. What it tends to look like is something like this. All right, you'll see that structure quite often. That's the consolidation I'm referring to. I call that an inside consolidation thingy. I've collected charts on this, but that always tends to make for quite a useful SR block. Right, so once the price goes and hits that area, you can pretty much always suspect that it's going to give quite a heady bounce from there. So looking at USD JPY as she stands at the moment, I would still be looking at the support block, although there is a tentative sign. Let's just see if I can get a good color going on here. Although there may be tentative signs of a change in swing direction. All right, but overarching, I'd be looking at the structure here, right, which is the hooking structure. Support being established. There's a little cluster here giving support as well. The price has been moving up, and so that block there represents the nearest support area while the price has been moving up. Okay, once that nearest price area gets taken out, that is the point you would start looking in the other direction from a plain support resistance using that support resistance technique. And that's Euro JPY. Okay, if we look towards the Aussie, all right, Aussie, very interesting. We had quite a strong move last night, and she's hitting some support resistance walls. I know that, right? But again, just a question of zooming out. Right, so I'm here on the M5 chart, right, and we can see we've had nice strong break, particularly overnight as she's tended to move higher, and support being established in the opening range of the day. And so from a tech perspective, as long as she remains above that 98.20 area, she's a technical long, and if she breaks down below that 98.20 area, tech short, right? But you'd be looking for resistance to be established first, right? So so when it comes to just determining a direction to trade, right? If all you were doing was to be using a naked chart, all right, no lines, all you're looking at is the most recent structure, then this is how you do it, right? This is how you do it. So you're just looking to say, Has support been established? Has resistance been established? If support has been established, then I'm looking for a technical long. If resistance has been established, then I'm looking for a technical short, right? So if we turn, for example, towards Euro GBP, this is Euro GBP on the M5 time frame, and you can see pretty much exactly what's going on here. Just looking at the most recent price and the most recent structure, and probably what I'll do with this chart is I'm going to show you interpretation at 2 or 3 different stages of this, right? So and this is going to start with the block that we have here, right? So you can kind of see that block on the left hand side, and the first thing that you would do even inside that block is that you would look for a move that is starting to establish support or is starting to establish resistance, right? So it doesn't matter where in that block you begin, right? One of the things you always have to be wary of is that until price breaks a range, technically it's flat, right? There is no trend, right? But if you're looking here on the M5 time frame, you see all of that mess on the left hand side. You want to anticipate, is there going to be a break? Is there going to be a break in a particular direction? If there's a break in a particular direction, where are we looking for? Where are we looking at support? Where are we looking at resistance? At what point do I get short? At what point do I get long? So if you're looking here at USD JPY, and we were looking at the last structure, so you could see that the price moved higher, established support, and that support held, right? So price pulled back, broke higher, and the bias is intact for a long trade because you can see that support has been established. Once the price ended up breaking below that, she hooked back and she broke down below, right? Then that becomes your cue immediately to recognize that, hang on a second. Now, you know, from having a situation where we had support being established, we're now in a situation where we're having resistance established, right? And so a change in bias ought to be looking for a short trade, and then after that you're using your tips and your tricks to kind of get you into that, right? So you see the price break down, pull back again, resistance is being established. You're interested in a resistance trade there, you're interested in a resistance trade there. If we were looking at the most recent structure, you'd say, okay, support has been established, and the price breaking down through that support would give you indication that you ought to be looking for resistance in this particular instance, right? So even when you have a messy, choppy movement, right, and you always have to exercise care when there's that chop on the left hand side. Look at how clean that chart was with cable, with USD JPY, Euro JPY. Look at how clean the chart was with Aussie, right? But we're looking at Euro GBP. You've got that chop on the left hand side. If you're going to get into a trade, you still need to mark where that nearest support and resistance area is, and whether you use that in order to push yourself north or whether you use that in order to push yourself south, that is the area that is going to establish the most immediate bias for you, right? So where the price is in proximity to that is going to tell you I ought to be looking north or I ought to be looking south, right? Even when you have that chop on the left hand side, right? So so looking at Euro GBP, you can see that how choppy that was on the left hand side, but as a technique, the technique doesn't falter, right? It's the same every single time, and then after that, you know, what you're most interested in is where are we in proximity to the daily opening range. We take that as a 6 a.m. candle. After that, you're interested in where are we in proximity to the weekly opening range, and where are we in proximity to the monthly opening price, right? So are we above that or are we below that? And generally that kind of gives you conviction to look for an extension in any kind of directional move which you're having at that time, right? So So if you see a resistance being established and the price is above the daily opening range, then the daily opening range would tend to make the first target. After that, you're exercising caution, right? And normally you're only looking to trade once the price is above or below that range. You're not looking to trade if the price is hanging in that range unless you have another reason to do so, right? So those are what tends to be significant. You see that we've gone through 4 examples in the best part of 5 minutes, right? It doesn't take very long at all. If anyone has any other suggestions, we'll look at more. NZDJPY. Okay, it's not a pair which I normally look at, right? But what I will do is entertain it, right? I very much suspect that it's not going to be that far removed from what we're looking at on the other yen crosses. It certainly doesn't appear to be, right? So here we go. Here's our M5 time frame. Oh, hang on a second. You're just gonna have to wait for the chart to catch up. Here we go. Okay, so it looks like, you know, it's pretty much same story. It's pretty much same story as we've seen on the other yen crosses. You're going to have to kind of make a decision what you want to do here for a very obvious reason, I think, which is that if we're looking at the most immediate place where support has been established, first off, good chart to be trading because it's been trending, right? And so the most immediate support resistance area is something which is going to be significant and matters. Here's our hooking structure. The price broke higher, and so technical long above that level. Here's the kind of inside consolidation. I think we saw that on Euro JPY or something as well, right? So so that tends to be quite significant. But if we're looking at the most immediate price action, and you know, sometimes you can look at an M5 and you can read something that's happening on an M1, right? That's how crazy we're going to get this morning. But if we're looking at the M1, then as far as structure is concerned, that there is a support resistance block. And this is the next one down. And the most immediate price action would suggest that she wants to move a little bit lower from here. All right, so it's not something you have to do just on the M5. All right, sometimes you can look at an M5 and read what's going on the M1. But even on the M5, it is visible, right? That it's what's visible and what caught my eye is the potential here that we've had an SR flip, right? So so support. The price broke down, pulled back, and we've had support turning into resistance here at the kind of 60-40 area or something, right? So so that is something that I would be very aware of. The most immediate move, and I'm zoomed in here, is in this price block here. Right, so at the moment, I would say she's going to head down, right, just on the back of the fact that the resistance has been established. Break through 60.40, you can look for an acceleration north. You know, if it turns into kind of one of those power-up moves where she pulls back and then makes a strong move north, but you'd want to see her move through the 60.40 area to be looking north at the moment. Otherwise, it does look like she's going to push towards that 60-10, 60 area, and that is where you have the support block, right? So resistance up here, support down here, and she's between a rock and a hard place as she stands at the moment on that M5, right? So you have to kind of make your choice, right? You have to kind of make your choice on that. If you're looking at it from a systematic point of view, then then both of those blocks are very tradable, right? Regardless of the outcome, it would make sense that if you wanted a long entry to be looking in this block here, and equally if you wanted a short entry to be looking inside of the block here, right? Both of them would be sound, rational decisions, right? And that is what it's about above everything else. So from a systematic point of view, either would make sense, right? But just looking at the most current price movement, it's just interesting that we've had that hooking structure established. She's breaking down from that, and I would say that the 60 area is what presents an obstacle to the current downswing which is in play. Okay. H4 combined with M5. I think once you start changing those time frames and you're looking at the higher time frames, there's a whole lot of other business which starts coming into play, right? So if I'm looking at the H4, I'd start looking at my trend lines. There's a hooking structure. We can see quite a strong resistance which has been established at around the 61 area, and if the longs are going to come into play, then the price really needs to breach that resistance, right? And once she's breached that resistance with any kind of strength, then you're looking at a pullback, and then you're looking for support to be established, right? So so that is something that I would be aware of. I'm just looking at the most recent resistance which has been established as she was falling. If we're looking at the current PA, there's hooking structure which had her pushing north. But that hooking structure doesn't give us an entry price right now, right? It's quite distant from where we are right now. And the trouble with looking at this on the H4 time frame is that if we're talking about an intraday entry and we're talking about interpreting price the moment that we hit the chart, right, that's not really going to allow us to do it, right? That's something that we can look at as a level if and when the price reaches there, right? So again, the H4 is telling a little bit of a story here. I'd be reading quite a lot on this chart, right? So you've got your FDF structure there. You've got your hook, which has been establishing resistance, and the price broke down. I would very much suspect that if the price broke above that 61 area, then it's resistance, and you could see price starting to accelerate if she breaks through that and support is established. But from where the price is at the moment, you'd be looking for resistance to be in play rather than the support. The support is all the way down in those lower 59s, which is where the H4 hook has been established. So if we were looking at the M5 solely, right, it kind of gives you, we're just kind of looking at the immediate price action and saying, okay, what's the current state of play? Is she moving up right now, or is she moving down right now? And if she's moving up, we're just looking at the most immediate support area and saying, look, this is the most immediate support area. This is what's going to define the immediate move as it stands, and that is something that can push you into a trade usually quite quickly, right? Again, I just want to kind of mention the point, when you've got that blank on the left hand side, it is so much easier than when that left-hand side is full. So these are the types of charts generally to be looking for. Okay, what do you do if the larger time frame suggests a long bias but the lower time frame suggests a short bias? Which one do you go with? Okay, all right, I'm going to give you a little bit of a challenge. Right, I'm going to give you a little bit of a challenge. What you have to do is to find a chart where the larger time frame is suggesting a long bias and the shorter time frame is suggesting a short bias at the same price. Okay, this is a little bit of a challenge, right? That's what you have to do. Go and find that chart. It can happen, right? Don't get me wrong. It can happen. But this is a very, very rare occurrence, right? It's very rare that I find something like that where you have both a long bias and a short bias on different time frames, and it's happening at the same price, right? This is something which is a very unusual occurrence. I've seen it happen a couple of times, right? But what you really have to do is kind of take your pick, right? And you just need to choose. I'm going to go with this one or I'm going to go with that one. Usually with the larger time frame, you'll be looking at a more significant level, right? And if there's a line involved as well, then I would tend to give that preference. Or you might start looking for something else as confluence, right? But that kind of situation is not ordinary, and I think that you would struggle to find that happening at the same price level, right? So so it's not something that happens every day. It would be very, very unusual for you to find that happening at the same price level. It doesn't. It just doesn't happen, right? So, so that's a challenge for you, man. If you can find it, all right. I'll buy you a kebab, all right, the next time I'm in South London. Yeah, I know you're looking through your charts now. You're going to try and catch me out. Okay, so Aussie's come up with a higher time frame resistance, I think, but the shorter time frame. Okay, that one's incomplete. I'm going to have to try and work out what you mean. All right, so Aussie has come up with a higher time frame resistance, I think, but the shorter time frame is still going up. Okay, all right, so we're looking at support resistance, right? And we're looking at that structure, and let's say that we're looking at the multiple time frames in order to establish that, right? So, or rather, let's say we're looking across multiple time frames. The first thing which we want to note is that the immediate price is the most important, right? So if we're looking at the immediate price and we're saying is support being established, is resistance being established, and what price is that happening at, right? So what I'm going to do is I'm just going to kind of block off that price and say it's happening at this price here, right? That's the zone. And if we're looking at where support has been actually established, the price at which support has been established is 98.25, 98.26 area. All right, so that is the place where support has actually been established. It's not been support has not been established at 98.41. All right, it's not been established at 98.50, at 98.60, at 98.70. If we're looking at the most immediate price, where we've got our actual level, right, is support. The rest of it reflects the zone, right? So there's our actual support. Right now, if we're talking about the price at which a long bias from a trading perspective would give us the least risk defined entry, right? Then you'd say, well, as long as 98.24, 98.25, this price area here is holding, then it's safe to assume a technical long bias. And if the price is breaking down below that, then from the perspective of the most immediate price, at that point we can start considering that, all right, we need to see some resistance established, and then we can start looking south, right? That's how it stands at the moment. So your key price here at the moment is 98.25, that kind of price area. If you're looking at the hourly on the H4, and then you're saying, okay, but I've got resistance. Your resistance on the left hand side, which you're looking at, and she's in a resistance block, very much agreed with that perspective, but your resistance here is not at 98.25, right? If you're looking at these overlapping hooking structures, and I really love overlapping hooking structures, they tend to provide excellent resistance. The first price area that you would be looking at would be roughly where the price is now, which is this 98.52 area, and then after that you would be looking, you'd probably be looking in that candle wick, which is somewhere between 98.70 and 98.80. All right, so they're not at the same price, okay, and that's what I wanted to point out when I was answering Pure's question. Yes, she's at resistance. There's more than one reason to be looking at resistance here. There's actually a trend wall which is in play on, and there's actually a trend wall which is in play on the hourly. It's in play if I can find it. All right. Well, this is, I think there's a trend. There's a couple of trend walls there. That's one. There's a flag wall which is in play as well. Right, these lines are messing up this morning, right? But look, there's a number of reasons. You know, there's a number of things that you could be looking at and saying, okay, you know, there's potential resistance which is going to be established, right? But what you always have to take in account is the most recent move, right? And when you first come look at a chart, it's not about what's happening on the left-hand side. It's about what's happening now, right? And what is the current price action suggesting? One of my kind of pet rants which I have is about how the market really doesn't give a damn about historical price, right? And this is something that I learned the hard way. It is something I learned in the trenches when I was first learning how to trade. And anyone who said that, look, you know, I know what I'm doing, and you ought to check out price action trading, and I'd say, okay, fantastic. Price action trading, what do I do? And they'd say, well, just look at the last high, and when the price goes there, sell, right? And look at the last low, and when the price goes there, buy, right? And I thought, wow, you know, this is something that sounds really amazing, until I actually started doing that, right? And ordinarily what happens is, you know, the price goes and, you know, you're waiting forever and ever, right? And if we just take the case of this Aussie by way of example, right, would say, if we just take, and we're gonna do this from a kind of little bit of a historical perspective, but you could do this at any chart. You know, say for example, the price was sitting here, right, and you were trying to apply that perspective. You'd say, wow, look, you know, when she went and hit that high there, look, you know, look how deeply she fell, right, and look how hard she fell. You know, she fell to the tune of a couple of hundred pips. When she went and hit this low here, right, look at this bounce that we've had, right? That bounce is a significant bounce. She's bounced for 100 pips, right? And currently the price is here, right? And and what they'd say to you is that, because the price bounced from here, the next time the price comes to this level, you ought to be buying. Right? And because she fell from here, the next time the price comes to this level, you ought to be selling. Right? And this is how you trade price action. Right? So you just take the last high, you take the last low. If she's hitting the low, you're buying. If she's hitting the high, you're selling. Right? Now, there's a danger in this. And the danger in it is that what you have to realize is that, if the price came all the way down here, all right, there is nothing which is going to force her to bounce from that level. There's nothing which is going to force her to bounce from that level. The direction of the move is down, right? And if she's heading down, you can always assume that she's going to end up going a little bit further than you ever thought she was going to go. All right? You can always assume that. In this case, she gave a couple of bounces, right? But then you can see the kind of continuation that she had, right? So if you were holding out from that level for another swing, right? And that first swing there went from 97 up to about 98. So it's like a 200 pip swing, right? Would you have been satisfied with just 40 or 50 pips here, right? And more than likely she would have stopped you out. In fact, if you were looking for a market order here, right? Depending on how tight or how loose your stop is going to be, right? At some point you were going to get damaged, right? And that is something which is generally the case, right? It's that when price goes and hits hits a previous high or a previous low, you cannot assume that it's going to act as support or resistance. What you have to do is to look at the current wave, and you have to look for support and resistance in the current wave, and then gauge whether there's a level there which is giving you a flip and giving you a change in that direction, right? So if we're looking at Aussie at the moment, she's coming up now, and she's coming up, and there's the here's the kind of previous high here around the 99 area, right? You cannot assume that just because it was a previous high before that the price has to stop there. If the price did not break through previous highs and lows, right? If she didn't break through, she would go nowhere. She would just be eternally in a range, right? So what you have to do is look at the current price, and it's looking at that current price action, that current price movement that keeps you on the right side of the trade. It keeps you in the current momentum, right? And it's that whole thing about imagining yourself in a real marketplace, and you're there trying to sell your melons or your mangoes, and all you're going to be doing is looking around you and looking at the price that other traders are selling their melons and mangoes at, and you're just going to be matching their price. You don't want to be making any less money than them. If they're raising the price, you're going to be raising your price. If they're lowering the price, you're going to be lowering your price, because you don't want to be left with any stock at the end of the day, right? You can only do that by examining the current price. You can't do that by looking at what the price was yesterday, last year, in the last 5 years, and sometimes gosh knows how far people go back, right? But it'll never tell you that, right? What tells you is the most immediate price. In fact, there's probably a better example of this if we just take probably on an intraday basis and looking at the high-low swing here, all right? That the price went and hit that level. She fell back to the tune of almost 50-60 pips. So you'd say, well, you know what? Here's the low, here's the high. She's fallen back about halfway. If she pulls back here, I should sell. Right, and that kind of gives you an idea of what I'm talking about, right? These highs and lows are there, but they're broken through, and you will find that the price tends to break them more often than they tend to hold, right? So we want to just look at the most recent momentum and go on the back of the most recent momentum, and use that to determine our immediate trading bias, rather than to be looking at the historical prices, right? So If we're looking at Aussie, you can see quite clearly, there's been a bit of a momentum break. She's pushing higher, and what will have you looking down ultimately is when you start seeing resistance being established rather than seeing support being established. But I would still say they're happening at very different prices. It's not happening at the same price. Okay, what if the pair has reached its daily range at a previous high that was on a weekly chart? All right. Look, it's exactly the same, right? That it's exactly the same, right? You're looking at a historical level, right? You're looking at a historical level, and what you have to do is say, okay, say you wanted to use that historical level in order for you to establish your bias. All right, let's say you wanted to do that. Right, then if you it really comes down then to a question of technique. All right, that you have to kind of make up your mind. Are you trading a momentum candle? Right, and that's what you want to base your trade entry on, right? Because on the back of a momentum candle, it's a little bit like when we did pound CAD. We saw that there was a momentum breakdown in the pound CAD, and after that the price went into a range, and she just kept on pulling back. She just kept on pulling back into that range, right? So here we go. Right, so I mean, this is what our analysis was based on. We just had that momentum breakdown, right? And then we saw the price go into a range, and then the analysis became that we're looking for a continuation of that momentum, right? So we've had the momentum breakdown, the price has gone into a range, she's been unable to take out the high, right? So we're going to look for a continuation. That's the analysis which is on the watch list, right? And so it's just a case of sell the high, right? You just sell, and if she pulls back, sell again, and if she pulls back, sell again, and you're only wrong if she goes and breaks the high, right? This is an analysis which was not based on any support resistance structure, right? It was just based on the back of a momentum breakdown. That's all, right? So we made a choice on the back of that. It's an independent technique from support and resistance, right? And I think in that kind of instance, that's how you have to look at it. So which technique are you applying? So you've chosen a particular technique, and then you apply its rules, And it's the same if you're using trend lines, right? So look, I took an entry on Euro AUD, right? And I went short on Euro AUD. I went short on Euro AUD because the price came up pretty much near retesting a broken trend line. Right now, you can kind of see where that entry is. Right, it's a little bit freaky, but these are the ones I like. Right, and again, it's very much in line with the analysis which I've given on Euro AUD. Right, which is that my expectation is that if the analogy plays out that we have with GBP JPY, we're looking at quite a significant breakdown on Euro AUD. We're looking for her to break down towards maybe possibly the 23-22 area, even go and retest the lows. But I suspect that she's not going to breach the established low here, right? So I think that is probably the low for the year at 2140, right? But she can push down as far as that. I'm actually looking for a lower, for a higher low to be established, and then a higher high, right? That's what I'm looking to take place here. But she broke down from the channel, she's pulled back, it gave me a short entry on the trend line, and the trend line pretty much defined my risk, right? Um, if she didn't quite go and hit that line, I was just looking at the established resistance here on the left-hand side. There's a hooking structure there that she went into, right? So, kind of actual resistance made it really easy to pull the trigger on that trade, right? But if I was looking at the immediate structure on that, I'm just going to drop down. I'm going to drop down some time frames, right, and show you potentially where that trade entry could have been, right, on the lower time frame. So I'm just kind of doing it bit by bit. I'll drop down time frame by time frame until there's something which we can recognize, I suppose, right? But okay, here we are on the M5 time frame, right? And so if we're looking at the left-hand side, all right, what's going on in terms of the price action? She's moving higher. You know she's moving higher because she's establishing support, right? And she keeps on hooking and moving higher, right, until she ends up breaking down through the support. And this was a very well established support, right? She ends up breaking down. When she pulls back, support becomes resistance, right? So if you were looking for a swing and you were looking for a confirmation of that swing, right, and you were just looking at the most immediate price, this level would have given you a very comfortable entry to be looking for a short on Euro AUD. All right, that would have given you a very, very comfortable entry. If you were a little bit more aggressive in looking for that flip, right, you would have read this as a sign that there's going to be a momentum breakdown, right? And we've seen quite a lot of these recently, right? We've seen this price action we've seen it on Euro USD on quite a wide time frame, on an hourly and on an H4 time frame, where you have this kind of price structure before price breaks down. We've seen it on pound Swissy, right? Again, it was on quite a wide time frame. We've seen the same thing happening on Euro GBP, right? And this particular structure, before the price breaks down or breaks up, we saw it breaking up on Euro GBP from this particular structure. But if you were trying to read that a little bit earlier, you could have read it. You could have read it earlier, right? And I'm just going to show you where you would have read it, which is you would be looking at this particular price structure here, right? And you would be saying, okay, we've had support established here. So if the price ends up breaking down through that support, then and then this alters my bias, right? Whether you would have been able to take a trade there or not, a little bit hard to say at this moment in time, right? In fact, probably not, because you'd wait for the pullback and you'd say support. I want to see the support turn resistance. As it happened, you know, the pullback was on this block here, right? In fact, even if you were taking the nose, right, you could. There's a little bit of a nose there. I think you can recognize it now. What's gone on? All right, so there's your nose. All right, and that's something that potentially would give you. That's something that potentially would give you an entry. So, you know, just by looking at the current price movement, it won't give you an entry which is sharp as when you're using a trend line or you're using something else for confluence. But what it will do is give you a confirmation that the price is heading in the right direction, right? So, you know, you're not trying to head something off. You're not trying to get into a trade anticipating a move, right? You're getting in once that move is taking place. And there's an advantage to that as well, right? You don't always have to be catching these, right? You don't always have to be catching these. Sometimes it's better to be catching this because at least you had a confirmation, right? And you know, looking for these, you do get stopped out. I'd get stopped out, right? You don't always see those, right? I'm perfectly right. You don't always see those, right? You don't always see the ones where I get whacked. The ones which I tend to bring up on the watch list and the ones that we tend to talk about uh, tend to be the kind of cleanest entries and the cleanest setups on charts. But I do make other attempts, right? And I don't share every attempt because not every attempt is clean. And the ones that I share, they tend to be the cleanest ones, right? That, you know, this looks really clean. Everyone ought to be looking at this because it's a very, very good representation of what our methodology is about. Sometimes you have messier charts and I'm making attempts on those and I end up getting stopped just like anyone would get stopped, right? Um, and that's the reason why it pays to wait, right? It pays to wait. When she makes a move in your direction, you look for a pullback, measuring where that support resistance is going to be. Just looking at the most immediate price area on an M5, easy peasy lemon squeezy, right? It's not really that difficult. Okay, so and then when you start marrying that up with some of the other techniques we've looked at, right? So you know, looking for a break of an hourly candle, looking for a momentum bar, using an hourly candle as a stop, all of these kinds of things, it becomes relatively straightforward. Okay, I like the entry, like on this chart, as I think it has the least risk for entry as banks are selling there. Yeah, I suppose, you know, even if you're looking at the current price movement, um, and there's a little bit of a risk here. Your risk is in that momentum bar, but you're seeing resistance being established up here at the kind of 27 area. So that 27 handle is important now, right? The price, well, you can see in terms of the price action, right? She's pulled back. It's a little bit of an ugly hook there, but she's pulled back and she's fallen down from there. You've got resistance being established. There's a cluster here as well, right? But I'd like the idea of her breaking down a lot more. On the hourly, there's something quite interesting going on here, and we looked at this structure. I don't know. I think we looked at this structure last week, right? But imagine if it happens like this, right? Just imagine if it happens like this. I'm going to zoom out a little bit, actually. What's going on here? Is that at the most she'll allow me to zoom out? Can't be. All right, let's look at it on a H4. You know what I'm imagining here? Right, what I'm imagining here is a double bottom breakdown. All right, that's what I'm imagining. So, and what's important is how it breaks, right? But if you remember last week, we were looking at this structure, right? And we were saying that's quite an important structure, especially when the price ends up breaking straight through it, right? And you tend to get strong momentum move once you breaks through it, but later on you'll be looking at that as a price attraction point, okay? And that's if she breaks like this, right? So if she ends up breaking down hard below it, later on you're going to be looking at that as a price attraction point, and you're going to say, you know what, maybe we can start targeting it. And that's going to get interesting when we start targeting that, right? It will get very, very interesting because you know, it's just a case. Sometimes when you've seen price move like this forever and ever, it's interesting to see it happen like that. There are the nuances as well. If she ends up breaking just below and starts consolidating here, that's going to get a little bit boring, and then you have to be in two minds, right? You know, is she going to break back up and start making her way higher, or is she going to break down from that consolidation? But if you get a strong momentum move, then it would very much be worth giving chase. Right, and even right now, it just kind of depends on whether the risk definition suits you. But we are looking at her moving lower, right? One of the things that I've seen happen on these types of channel breaks is that sometimes she goes in a range under that broken line, right, before eventually breaking down. So that would again be a little bit like what we saw happen on GBP CAD, right? But that trend line break does define the bias for me at the moment on this pair, which is, you know, as long as she's able to stay below that breakout price, right? And I'll just show you where the breakout price is. We've got our breakout price here. So around that kind of 28.20 area, as long as she's able to stay below that price, it's technical south, right? And if she moves above, if she moves, then she's able to consolidate above that price. Then you have to be a little bit careful. The trend line break is still giving you a southern bias, but you could start suspecting that she'll go for another retest of the underside, right? That's how I'm thinking about Euro AED at the moment. But like I said, I think on the smaller time frame, it does really demonstrate why it's important to sometimes wait for that flip, right? But yeah, it was a good entry, I have to admit. She moved the best part of 7 pips against me, right? So not bad, I'd say, right? And on that spike, she probably came within like 1 pip of stopping me out, I reckon, right? Um, but she moved the best part of 7 pips against me. It was a fairly good entry, even if I say so myself, right? Even by my poor standards. In fact, you know what I'm going to do? It's worth kind of looking back. We started off with cable, I think. So where is cable? All right, something's happened here. I've lost my cable chart. Ah, I know why I've lost cable, because it's now Kiwi yen. Okay, so um, if we go back now and we look at if we look at cable, right? I think we've given we've kind of given it ample time. There's your support block. Price pulled back to the support, and she's making her way higher. Right, we can see that quite well. So if you're using that support block in order to establish your bias, you'd be doing quite well. You'd be doing quite well on cable right now. What else did we look at? We looked at USD JPY. USD JPY and USD JPY. I think we looked at the larger block here. Is that the block we looked at? All right, hang on. If we look at, I'm just going to go back and see what we looked at. USD JPY. Sorry, excuse me. Euro JPY. Right, so she's pushing back a little bit from the expected area, and we looked at Aussie. All right, so Aussie hasn't really pulled back deep enough, right? But yeah, she does look a little bit between a rock and a hard place right now, right? I'd say the price that she's at now is the kind of price you'd probably want to sell at, right? Support still there at the 98.25 area, so technical longs above that area. But if we're looking at the most recent price structure, it's just a little bit interesting, right? That we've got possibly a support resistance flip going on here, right, which would have me looking for a sell. But if she broke above that level, you'd look for the move north to accelerate, right? So this is on a very kind of intermediate level. We are above the daily opening range at the moment, right? So and just marginally above it, but it means you have to exercise caution. and exercise a little bit of care with that, right? But still hanging above support. We looked at NZDJPY, dollar CAD. Did we look at dollar CAD? Right, so a little bit of a hooking structure there, yeah, right. So I would just be looking at this block here on dollar CAD, right? And you would take a break through that block as an indication that she wants to move north, right? If she remains below that block, then you would continue to look south, right? So it's the most nearest support resistance, right? That's all we're looking at. Resistance is established around the 103.40 area, right? And should need to make a move through that to establish a long bias. Okay, fellas, I think that's it. Right, so thanks for attending this morning. Again,